All right, welcome back everyone to another episode of the Wall Street Rundown. I'm your co-host Billy. I got Wale with me. Let's go, LA.
What's good, everybody?
Man, the market today it was gonna another downturn today. I mean, we S&P got dragged down. I think a lot of the chip companies are just kind of like, I don't know, the valuation is probably like rebalancing. People are taking profit, but we have seen another week of downturn market, heavy on the tech and chip sector. You know what I mean? So if you guys go look at that, a lot of those big stocks that were driving the market up, a lot of them are down big. There's opportunities there possibly, but we also seeing maybe the clock is turning or the arm is turning towards something else other than just the chip, right? But looking at today's man, like Nasdaq was down almost like was down like almost like point 10%. I mean 0.443%. S&P kind of came back a little bit. It was down only 0.10%. Dow Jones 0.35 and Russell 0.40. Well, Russell and Dow Jones actually kind of a little bit up today. What happened with IWM? Something happened there, but it was kind of a little bit up today. But if you look at the semiconductors, man, Microsoft has been getting beat. Nvidia has been getting beat. And surprisingly, oil is down to $70, to below $70. I mean, we see that there might be potential where the Strait of Hormuz is open and all that stuff. So some things are changing in that area, you know. Another one that I'm kind of curious to get your opinion also, while there's a 10-year yield dropped to like 4.41%. I mean, not a whole lot, but it dropped a little bit too. So again, something to keep an eye on. But overall, man, the good news of today, y'all go look at Micron. We'll touch base in a little bit, but that Micron run is ridiculous. Ridiculous. I mean, the way things moved after hours is crazy. And it's looking like it's pulling Intel with it. Also, Intel is actually up like $7 after hours, also. So again, a lot of things are happening, man. So Wale, let's get your feedback on this week overall.
Yeah, so this week, how should I put it? I think Billy touched on this a couple episodes ago, that as we were getting towards the end of June, we could see some more selling, profit taking, etc., especially in the names that have been carrying the market for the last, what, 3 months. And that's kind of what we've seen because if you look at the selling that we saw yesterday, so we saw a lot of selling in the AI related names, lots of selling in memory, lots of selling in chips like TSM and all that stuff. So we saw a lot of selling in that. And then yesterday we saw some rotation into some of the software names. So we saw some cybersecurity names that were doing pretty good yesterday. So not surprising. Obviously, as institutional fund managers get to the end of the quarter, always gotta, you don't make money on investments until you sell, right? So you can't just hold investments forever and never sell, especially if you're managing other people's money and you got to book profit. So
Yeah,
not surprising that we're seeing selling. I think my biggest thing was the magnitude of the selling.
of the
Like
selling.
a 3% drop in one day without any major headlines kind of is unusual. I
Yeah,
thought maybe something went wrong with the war. I thought maybe oil went up, and none of those things happened
there's
yesterday.
nothing.
So that was a little bit surprising. So again, not I'm not surprised that we came off the highs. I'm just surprised at the magnitude because we gapped down like what 3% and just kind of stayed there.
Yep, yep.
So that was a little bit surprising. And I wasn't sure if, maybe people were getting a little bit nervous about MU. Maybe people are getting a little bit nervous about PCE coming up. I know the market is starting to price in no rate cuts now until maybe 2027. Maybe that was the catalyst, but I didn't see any real big moves in interest rates yesterday either. So I just, that was a little bit unusual. Now, today, Micron earnings. Oh,
Ooh,
oh,
boy, oh boy.
oh my goodness.
Boy, oh boy.
It just tells you that the run is not over. And it doesn't sound like it's close to being over. So let's just look at these numbers. So revenue for the quarter hit 41.46 billion, which was up from 23.86 billion last quarter. And last year, 9.30 billion. So the revenue growth is just ridiculous. Like that's just crazy. The biggest thing that I took away from this earnings report is gross margins. 84.9% gross margins and 81.2% operating margins. So that just tells you that Micron has pricing power like crazy. Like they have crazy pricing power. They even guided higher for next quarter. And they're looking at gross margins of near 86%. So we saw a big move in the stock after hours, which to me is warranted because they just hit it. They're hitting on all fronts.
Yep.
And it's just one of those things that you can't find any flaws in this earnings report. You cannot find any flaws in this earnings report. Um, and I also saw that HK Hynix is going to be listed in US markets
Hmm.
next month, which is huge because there is no direct way to own HK Hynix except through ETFs, like the DROM ETF, and then
Yep.
also the EEM ETF. EEM also holds HK Hynix. Now you're going to be able to buy that um, directly when it becomes listed on the US markets pretty soon. They're going to be raising money. So from a investment standpoint, what I am starting to see now is the memory stocks are the ones holding the market up at this point.
Hmm.
Before it was the chip stocks, like we had Nvidia that was just on that monster tear for, all those years from like 2021 to about 2023, 24, 25. Now it's the memory stocks, MU, SanDisk, STX, WDC. They're doing all of the heavy lifting right now, and rightfully so, because demand for what they need is just going up. So crazy, 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 crazy.
Well, I mean, I'm glad MU is gonna move up the market too, because maybe as we talk a little bit about this, I mean, maybe we can kind of have some breather from this dropping we're doing. But let me just talk about the just the leaders when it comes to this, you know, memory stock. SanDisk year to date, 593%. That is crazy. Micron, 270% so far. Western Digital, WDC, 238% year to date. I mean, talk about like something that just came out of the left side. Like nobody will ever thought like these companies would all of a sudden be the best performance of of this year, coming after Nvidia and all this stuff. So again, it is crazy. If you got in the beginning of this and you held, kudos to you, because these are some crazy moves that you don't really see those type of moves in just a regular year, especially on those major stocks. Like this is amazing.
And remember, we're only halfway through the year.
Only
So
halfway.
you're talking about a 6 month return. That's just ridiculous. And the thing I will always go back to is, and I'm going to sit here and penalize myself for this. Back last year on our episode on September 24th, 2025, when we talked about all of the segments of the AI infrastructure investments that you could make, and we talked about high bandwidth memory.
Yep.
We talked about Micron,
Hmm.
and my mistake was I think that day Micron had reported earnings. I didn't jump on the call. I did not jump on the call. Had I probably jumped on that call and listened to what was going on, maybe I could have rode this wave.
Could have rode this wave. Yes. Yes.
So that's one of the biggest reasons why I tell people, man, sometimes you get on those earnings calls and you listen to what's going on with the business, man. And
You hear
even if I
something.
and yeah, and even if I didn't get in until maybe like December or February,
Yeah, because
right?
it was still under 1,000. It was like I didn't 700, maybe 600. So it wasn't even that much yet.
Yeah. So it's crazy now that when we look how the markets have performed, the markets have been continuing to push higher relatively without the help of the Magnificent Seven.
Yep.
Like Nvidia hasn't really done much. Microsoft ain't really done much. Meta ain't really done much. Google got smacked yesterday.
Yep.
So all the big names aren't really like doing a lot of the heavy lifting. It's some of these Smaller name. Well, I wouldn't call Micron small anymore. They're $1 trillion market cap now.
Huge. They're
So I guess
huge.
the question is how long before they get to 2 trillion?
I don't think it's gonna take long.
I don't think it's
I
gonna
don't,
take long either. No,
no, no.
I don't think so.
And speaking of that too, like I know, like we mentioned, like the market's going higher, even though the Max 7 is not participating. Now, once Max 7 actually start participating in this whole move, I think we're probably going to see SPX maybe hit 8,000 this year. Maybe, we might see 30,000 on is it what is Nasdaq sitting at right now? 29?
Let me see. NDX is about 29,000.
Yeah, we might see 30,000 on NDX this year. And it's because we're not seeing the broader market again not participating. Like it's only concentrated in a specific sector, in specific stocks, matter of fact. So again, this for me, this move with MU prove a lot of the stuff that we're talking about when it comes to the AI infrastructure. It looks like the it's basically moving to the next phase, right? So we start with the chip, now we're going to the memory. What is the next phase going to be? Is it going to be power? Is it going to be infrastructure? Is going to be data centers? Is going to be cooling? Is going to be quantum? Like you don't know yet until you actually start seeing where the rotation is going to happen next, right? So again, paying attention to those moves and like having those specific stocks under those specific um you know ecosystem that we talked about, knowing what stocks are important that in that ecosystem is very, very, very important. So hopefully we're able to catch the next one. But let's move on to Cerebras, man. Cerebras finally released their first quarter earnings since they went live yesterday, June 23rd. I mean, the stock dropped like 20%. I mean, they even closed like at post IPO low of $181.38. So even though their core revenue exploded like 92% year over year, I mean, they did not do bad. If Wale, if you want to kind of drop down and see like what's the analysis on why we saw that drop in the shares after they announced that.
So biggest thing with Cerebras, and I said this at the IPO when I looked into their S1. I said Cerebras is a good company in the semiconductor space, and there's a lot of good things to think about when it comes to their technology of chips compared to some of the other names that are out there. But my biggest red flag was their margins. Their margins were not that great compared to some of the other names like Nvidia and AMD and Broadcom and things of that nature. So when they reported for the first time as a public company, they reported margins of 47%. Then their guidance for margins for Q2 was only 36 to 38%. That's a big red flag if you're going to get priced like a typical semiconductor name.
Yep.
So to me, based on your margins, you cannot warrant that valuation at all. That's just my opinion. And that was a red flag for me when I saw their S1 when they went public. Now the market is penalizing them because their margins are
Mm.
going to drop. Now, is this a, how should I put it? Does that mean that the business is bad? I don't think the business is bad because the revenue numbers were good. But I think that the balance sheet and their execution is going to need to improve if they want to grow into their valuation. And this is one of the reasons why I always say sometimes, I'm not saying all the time, sometimes waiting for that first earnings report as a public company before you jump into an IPO name sometimes makes a lot of sense. Sometimes you got to give things some days to kind of, settle in. You also have to understand that, how should I put it? Companies are staying private longer.
Longer. Yep.
Like a couple years ago when like Facebook IPO'd and all those, like they didn't stay private for a super, super long time. I think Cerebras has been a private company for the last 11 years. You got a lot of insiders that have been sitting on this name and been sitting on shares for a long time that are
Yep.
waiting to exit.
Yep.
And to me, the longer a company has remained private, to me, the higher the likelihood that insiders are going to sell when they get an opportunity.
Absolutely.
Now, I'm not saying that that's the case all the time, but I think that you have to factor that in. So we go back to Cerebras, right? First day of trading, that thing hit 385, which means some people bought Cerebras at 385. We look at the second day of trading. That thing was trading around 299, 300. So we had some buyers there at 300. Now Cerebras is sitting below the IPO price of 185. They closed today at 182.26. I think in the after hours they're at 189, 190 right now because I think MU is giving tech stocks a boost. But sometimes patience, helps. Now I will put this out there though, and this is just an investment thesis, something to look to think about. One of the biggest differences between Cerebras and other chip makers or chip designers, Cerebras does not depend on high bandwidth memory. You don't need high bandwidth memory. The memory is built into the chip.
Yep.
So if there is a supply constraint with high bandwidth memory, does Cerebras have a competitive advantage to companies that need chips? Can they monetize that shortage? Something to
Mm.
think about.
Something to
Something to
think
think
about.
about. Something to think about. Because again, you got companies that probably waiting in line to get MU memory, to get Samsung memory, to get HK Hynix memory. And if that backlog is too long, do some of those customers pivot to Cerebras because you don't need high
Yeah.
bandwidth memory?
Yeah. Yeah.
We don't know. We'll have to wait and see.
Yeah.
But that's something to think about. Just want to put that out there. So
The
to
other
me, that
interest,
to me, that's their competitive advantage. Yeah, go ahead.
yeah, I was gonna say the other thing also, like the CEO kind of came out after the drop, and he's like, people misunderstood the guidance because he said that the margin is contracting. It's temporary. He's like, it's happening because of operational decision, um, to rent some of the specialized equipment from a legacy client to deploy capacity immediately for OpenAI. I guess they have an agreement with OpenAI, and they want to be able to kind of ramp up that production for them. So rather than a fundamental flaw in the chip pricing power. So, but basically what he was saying is the numbers that we have seen is not because they're doing bad. It's just because they are putting more money into equipments and stuff, basically. So again, and the other thing I looked at is like the full year guidance is actually not bad. I mean, the full year guidance is between 855 million and 865 million, which is about 69% year over year. I mean, they might have a comeback later on during the summer, honestly, from all of this. So not a bad company in my opinion. It's just right now, like you said, people want to take their money out. We've been sitting on this stock for years. Like they want to take some profit out and go enjoy life a little bit. So I mean,
Yeah.
we see that happening right now with SpaceX. I mean, if you guys look at SpaceX, the drop that we've seen, I mean, the period hasn't expired yet, but we've seen some crazy sell off also on SpaceX on that side.
Yeah. So I think to me, Cerebras, the way I kind of put them in the category of great product, great demand, but at this point in time, bad or messy economics. And
Mm-hmm.
one of the things that you have to understand is there will usually be growing pains with companies that go public for the first time. There's usually going to be some growing pains in the early parts of their lifetime. So, I don't think it's a bad company. I think it's probably something that I would put on my radar. But one of the things that I will say is like I like the fact that if there is a high bandwidth memory supply constraint, do people say, "Hey, Cerebras, what you talking about?
Yeah, can you feel the gap here? You
Can you
know?
fill a gap here?" So we'll just have to wait and see. So,
Yep. And I just looked it up. Their lockup date actually expires tomorrow. So
so that makes sense.
yeah.
It makes sense. Yeah.
Man,
So
that's gonna be
people
crazy.
people have been just gradually exiting their positions. And you got
Mhm.
to understand too that some of these insiders, like if you're an employee, for some of these folks, this might be like 60, 80, 90% of their wealth.
Yep.
And as an employee, it's probably not a good idea to have that much of your wealth tied into one stock. That's a dangerous game. Can it work out? Yes. But that's a dangerous game to play. So usually what you like to do is you like to keep some of that, but you also want to sell out of some of those names and
Yep.
diversify into, ETFs and indexes and things like that because you want to diversify your risk. That's just a prudent move, period.
Yep.
I don't
Yep.
care. I don't care how much you believe in that company. You gotta manage risk just as well as, being in a position that you believe in.
Yep. Yep. Man, so we shall see what happens with them in the next couple of weeks, also. But I think, in my opinion, I think they're still a good company. Let's talk about some of these big names, man, that are just tapping into um the debt market to trying to raise money for AI and stuff. Well, people don't understand AI is expensive, y'all. Like that thing is expensive. So we are seeing people get rid of employees to be able to unlock some money to be able to invest it back in AI. We have seen companies like Nvidia and I think even Amazon, they are borrowing money and tapping into the global debt markets just to be able to raise some money also for the AI and stuff. So let's talk a little bit about that because is that a good thing? Is that a bad thing? I mean, I think that whole thing started with Oracle when Oracle, tapped into their debt to get, I think they got like what, 45 billion or something like that. I mean, that whole process kind of started with that. And I was like, we're seeing more and more company now going into the debt market to be able to raise money to be able to invest into AI.
Yeah, so I remember when this whole AI build out started, and I was on the camp where it's kind of like, well, the money's coming from free cash flow.
Mm.
All the big hyperscalers, it's coming from free cash flow. Now that narrative has changed.
Mm-hmm.
Now that narrative has changed. And that could be the reason why some of these hyperscalers aren't really moving as much because they're tapping into the debt market, they're selling equity. And when you do that,
Yep.
it's not a bad thing long term. Let's just put that out there. All of these, I mean, just because a $1 trillion company raises debt, that's not a red flag. It's basically management of cash, right? Maybe they want more flexibility with what they do with their cash. You also have to understand that some of these companies can borrow money at really, really good rates because of their balance sheet. So this is the thing that's crazy is let me just go down this list. I got this from Bloomberg this morning when I was watching Bloomberg. Bond, US high grade bond sales. Let's go by company. $37 billion from Amazon. But when they looked at their orders, the orders were 126 billion.
Damn.
So there is huge demand for investment grade high quality debt. Huge demand. Let's look at Oracle, 25 billion. Their order book was 129 billion. Meta, 25 billion. Their order book was 96 billion.
Damn.
SpaceX, 25 billion. Their order book was approximately $90 billion. Nvidia, 25 billion. Their order was 85 billion. Salesforce, 25 billion. Their order book was double that at 50 billion. Alphabet, 20 billion. Their order book was 103 billion. And then this is not a tech name, but Abbott Labs is also another name that was raising debt, 20 billion, and their order book was 57.5 billion. So when you look at, how should I put it? When you look at how much money that these companies are raising and how much institutions are wanting, that's crazy. Like these debt offerings are super oversubscribed. And you also have to understand too that like when you're investing, like buying stocks is not own it's just one way of owning a company. Like owning a company's debt is another way to have, how should I put it? Ownership in a company. It's somewhat, I wouldn't say ownership per se, but you're part of the ups and downs of how a company performs. But debt, usually you're not you're lending them money, you're not getting equity in the company.
Right.
So you're getting interest, you're borrowing them money, you're getting interest. Those bond yields will fluctuate. And then when maturity comes, you get paid back your principal. So even though a lot of these companies are sitting on piles and piles and piles of cash, and they probably don't necessarily need to tap into the debt market, I think this gives them some flexibility. I also think that some of these companies are being penalized for that. Like, I think that that's one thing. And the thing that I fear, and I could be wrong, is that if these companies, if we move the needle 2, 3, 4, 5 years down the line, and all of this money that they're raising in the debt markets and issuing equity, and let's just say they overspent, they spent too much, and they got to pull back on spending.
Hmm.
That's not going to be good. That's not going to be
Definitely.
good.
Yeah.
That is that to me could ruffle some feathers and cause the market to start repricing things. I think I gave this example about hosting a Super Bowl party where you like, you're expecting 150 people, but then maybe like, only 90 people show up and you overspent and you got to
Right.
scale
Right.
back. Companies will be penalized for that, especially if, let's say, you're spending all this money today, in 2 years, 3 years, 4 years, 5 years down the line, it doesn't show up in top line revenue. All the investments that you've made, you're also going to get penalized for that.
Yep.
So I don't think anybody knows what the clear AI number spend is. I mean, Reuters just, I think my notes are saying Reuters say that the tech giants are expected to spend over 700 billion in AI capex, which is
Sheesh.
which is astronomical. But if we don't start seeing top line revenue growth and efficiencies, that's going to be a problem.
That's gonna be crazy.
That's going to be a problem. So the question remains is, will all this spending pay off? And at this point, it's too early to tell. We don't know. A lot of people are saying yes, but I would take that with a grain of salt because nobody really knows. I don't think anybody really knows. So we'll just have to wait and see how this plays out. So, before it started off with just, hey, we got free cash flow. This is just money that we got extra. Now it's like we got to raise equity, we got to tap debt market and things like that. So that's I won't say it's a dangerous game. I think it's something you have to realize in the short term and be very, very aware of. You can't just ignore it, especially debt of that size, because a lot of these companies haven't had to raise money in years.
Right. Right.
Right? They haven't had to. So,
Now, in your opinion, though, like, how would that impact the corporate earnings? You know what I mean? All this debt that they're acquiring, how is that going to show in their books, basically?
so it's going to show in their books when it comes to interest cost. So
Mm.
they have to pay interest on that money. So liabilities go up, but also cash goes up. So that kind of balances out because, again, when you issue bonds, you're receiving proceeds from people. So your cash goes up, but then also your liabilities go up. So that's break even. Where it eats into your balance sheet is the interest you have to pay on that debt every year. That's where you start to see it eat into margins. Margins are going to come down because interest costs will
Right.
go up. Yeah. So that's where it's going to show up on their balance sheet. So, we'll just have to wait and see what happens with the story because, again, um, I'm not going to sit here and say that, oh, because it's Google, oh, because it's Amazon, because it's Meta, that it doesn't matter. I think it matters. I think it matters. So we gotta see what these next earnings reports are going to start, showing. And I'll be 100% honest with you. I will say that if these companies don't show the type of returns that investors are looking for based on acquiring that debt, expect more layoffs.
Mm. Bro, I mean, yeah. Unfortunately, that's what's
Unf-
gonna be happening because they gotta they
Unfortunately.
gotta they gotta unlock some money. They gotta save some money somewhere, and
Yep.
human
Yep.
capital is always the first one to go.
Yeah.
So
Because we
so
saw what Oracle did. They
that
raised all
was
that they raised all that money and told their employees, bye-bye.
that's nasty.
So we'll see all these companies raising debt. I mean, the one name that hasn't made any fires is Nvidia. I haven't heard any major layoffs with Nvidia. we'll have to wait and see. We'll have to wait and see.
So I mean, I do agree, man. Like there's a lot to say into like the whole AI build and companies. I mean, the thing is like nobody's slowing down. Like
Mm-mm,
it's no like none of these companies are slowing down. They
no.
actually, matter of fact, are making risky moves to be able to pay for it. So there's somehow somewhere the confidence behind this whole AI movement. Companies are willing to spend that much money in it. So yeah, we shall see. We shall see where we end up here, man.
Yeah, it's a big arms race. It's a
Yep.
huge arms race, and it's one
Yep.
of those things where a lot of these companies are telling we don't want to get left behind.
Yep. 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 I mean, let's talk about this whole Bitcoin mining versus what's happening right now with AI needing data centers and all this stuff. You know, so it looks like. I mean, I think I was reading a little bit about this too after you sent it to me. Is there are some companies who have, if you guys think about it, like the way to mine Bitcoin was you actually have to have data centers. You have to create this crazy amount of data centers to go to be mining Bitcoin, and those things run 24 hours. And if you guys seen the boom of the data centers right now, especially with the AI and all this stuff, people are paying like millions of dollars to be able to build data centers in the middle of nowhere. If a company already has data centers that's already was for mining Bitcoin, they already have the facility up and running to be able to do data centers. So how is that impacting, or is that even impacting the price of Bitcoin that we have today? I mean, what is your thought on that one?
So one of the things that I have looked at, and the only reason why this topic came to my attention was I looked at MSTR.
Mhm.
M- MS, go look at that MSTR chart over the last 30 days. Just go look at the chart. It is
Nasty.
it is nasty. It is absolutely disgusting. Let's go to what date is this? May 11th, 2026. MSTR hit a high of $197 a share. MSTR is trading at $94.13 now. Now, as crypto has taken this nosedive, capital markets have done very well, if I'm not mistaken. Capital markets have hit all-time highs as Bitcoin has moved into the opposite direction. Now, I am not a Bitcoin expert. I don't know all the nuances of why this may be happening. I just like to ask legitimate questions. Another thing that I have also noticed is a lot of people who are in the Bitcoin community have said that Bitcoin is an inflation hedge. One of the questions I've said is that as inflation has increased, we've seen CPI increase over the last couple of months. Why hasn't Bitcoin proven to be that inflation hedge it's supposed to be? So I started saying, I'm not seeing that either. So then I started doing some research. We talked about a lot of these mining companies. Billy pointed it out. They have the infrastructure. They've got the GPUs that are running this mining business in Bitcoin, right? Now, a lot of these names are pivoting into AI inference and compute. And here is what some of them are doing. So this is the research that I said. A lot of miners are selling their Bitcoin to fund the pivot from Bitcoin mining to AI inference. And I'm pretty sure a lot of these miners are probably sitting on a hefty amount of Bitcoin. So that could be adding selling pressure to the cryptocurrency. A lot of people are saying, well, why would they pivot from mining to AI? Couple things. Energy cost. Energy costs continue to go up. As energy costs continue to go up and you're mining Bitcoin, and after all of these halving incidences, right, that happen every couple of years, the reward for mining Bitcoin goes down, but your cost to mine goes up.
Yep.
So if your reward is going down, but your cost is going up, you're running a losing business. You're running a losing business. So
Facts.
as a crypto miner, you got to start thinking, does it make sense to continue to mine Bitcoin? I think from an economic standpoint, if power continues to go up, Bitcoin mining goes down. And also, too, the price of Bitcoin comes down, doesn't make sense economically. So that crushes your margins. Then when you start looking at the profitability of delivering compute to hyperscalers, way more profitable, way more profitable because the
Mhm.
revenue is more predictable.
Yep.
The demand is there. So you make that pivot into AI inference. Now you got less miners, right, in the community that are mining Bitcoin. And if they have to continue to sell their Bitcoin to fund their operations for compute and for inference, that adds selling pressure to the coin. That's I'm not saying that's the whole story. There's probably other factors going on in the background, but I really think that that's a really, 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 really big thing that's going on in the background. And I'll
Yep.
just give you a couple names. I think I talked about this. A couple names that have made that pivot because it's not just one company. So you got Irene,
Irene. Yep. Riot.
APL, you got Riot, you got Wolf, you got CIFR, you got Hive, you've got Hut 8. So there's a lot of publicly traded companies that are making that pivot. And I'm not saying that they're going to shut down their Bitcoin mining operation, but if AI inference and compute becomes more profitable, I would not be surprised if they do.
Yeah. Yeah. These boys are gonna drop off of that mining Bitcoin. I mean, if big companies like Irene, Riot, TerraWolf, and Cypher like deciding to like pivot into this whole AI, you know, data centers rather than mining Bitcoin, that's taking a major resources from the Bitcoin world. I mean,
Mm-hmm.
those are big companies, you know. And according to like the CEO of um I think Daniel Keller, he he basically said Bitcoin mining is no longer effective and added that AI is showing explosive demand and miners are in an optimal position with cheap power and already secure data center sites, which is
Mm-hmm.
I'm 100% right. I already have the infrastructure, I already have everything set up. You don't gotta go buy land, you don't gotta go buy no equipment. Everything is here. I just need you to pay me and I'll do the rest. You know what I mean? That's like that's quick money right there, you know. I wish I would have started one long time ago. But then hindsight, right? Hindsight 2020, like you don't know that this is actually that's something you can pivot to in the future. Like
Mm-hmm.
if you have a data center that's running right now, like literally all any of these companies will pay you to be able to pivot to the AI infrastructure instead. So it's crazy.
And if you look at companies like who would have knew SanDisk would have pivoted into AI, right?
Crazy.
Like
Crazy.
they made USB and memory sticks and flash drives and all that stuff. They have now pivoted into AI. Who would have
Yep.
thought that
Yep.
they would make this crazy run because they pivoted to AI?
AI. Exactly.
Intel CPUs are now being pivoted into AI.
Crazy.
Remember, GPUs were not designed for AI training. They were intended for graphic processing. They were not used for AI. For
Nope.
years, they were graphic processors,
Right.
but someone had the hindsight to say these this infrastructure can be used for something way more efficient.
Yep.
And Nvidia made the pivot.
Crazy.
Because remember, Nvidia still has a gaming
Yeah.
business.
Business. Yeah.
They still got a gaming business,
Mm-hmm.
but they pivoted into AI inference and training and all these things
Which
that they're
is
doing.
crazy.
And they have made a freaking killing.
Yep.
And I think all of these Bitcoin miners are going to be doing the same thing over the next couple of years.
Yep.
And they're going to be like, you know what? Bitcoin mining, you know,
It's not profitable anymore.
it's not profitable anymore. We got to move into something more profitable,
Yep.
and we're starting to see that. And now, I'm not saying that that's gonna, maybe in the short term you see some Bitcoin friction. I don't know what happens long term. I'm not a Bitcoin expert, but I really think that that is adding pressure to what's going on with the coin because
Absolutely.
we've seen in the past when the market has rallied, Bitcoin has rallied with the market.
Yep.
We've seen the complete opposite now.
Yep. Yep.
So
Bitcoin is actually dropping. I mean,
yeah,
it's down more than 50% since it's high. So it's crazy.
yeah.
But
So
again, this all these things make sense. Like everything in this ecosystem is connected. You know what I mean? So it's like the same players who are doing something in one side are doing something on the other side. I don't know if MSTR would have benefited from turning their software company or whatever into something that has to do with AI. I mean, I think that would have made a killing instead of pivoting into Bitcoin.
I think Michael Saylor has too much pride and ego to say that he was wrong and pivot to something else. I think that he won't do it. He gonna die on that hill.
Yeah,
He gonna
unfortunately.
he gonna die on that hill. Trust me.
Yeah. Yeah. But it looks like they're still loading on Bitcoin. So I think they just bought some more actually maybe a couple of weeks ago. So we shall see what happened with Bitcoin in the next few years. And I think we know about Bitcoin, right? So it has this like period of stagnation. It's just like it doesn't do
Yeah,
anything for like months and months and months and months and months, and then all of a sudden there's some type of rally that just takes it
correct.
back to the all-time high. So I think right now is that time where like there's not really a lot of activity going on. All the major money is going to AI right now. So I think it makes perfect sense why it's not happening.
Yeah.
But let's look at some of the economic calendar going into the end of the month here. Nothing on this week. Let me see. Thursday, tomorrow we have the final Q1 GDP growth. So we'll see what that number is. Consensus is about 1.5%. And of course, that comes out at 8:30 a.m. Also, we have the initially jobless claim at 8:30 a.m. I think the expectation there is 220,000 jobs. So we shall see what's going to happen with that one. And then we have core PCE Friday, and then personal income and personal spending also coming up at 8:30 a.m. And then consumer sentiments and inflation expectations by University of Michigan at 10 a.m. revised version of it. So
Yeah.
Friday's gonna be
P-
busy.
PCE is tomorrow morning.
It is tomorrow. This says
Tomorrow.
Friday here.
Yeah. I got Thursday, June 25th for Monday personal income tomorrow.
Okay. Okay. So that's gonna be interesting also to keep an eye on it to see exactly what's gonna happen with those numbers. But I can't believe it's the end of the month. It's like we are next Wednesday is July 1st. A week from today. Like I feel like we just got into June and bam, it's gone. But next week, not a lot of stuff going on. We have the JOLTS job openings that comes at 10 a.m. on Wednesday. Pending home sales comes up on Monday. Not a whole lot of big economic calendar that's coming up next week or the first week of July. So with that being said, Wale, man, with MU, what are your prediction for tomorrow? Like, are we gonna wake up and see a huge reversals in the market, or are we gonna wake up and people gonna start taking profit?
So one of the things I'll say is today we saw what I like to call buyer's exhaustion. So basically when the market is moving towards the high of the day and then you see a major sell-off. And we saw that today. And I would just call this early signs of buyer's exhaustion. Whether that carries over into tomorrow, I can't really say for sure. But if MU is not able to hold its high price of the day, we could see some slippage. It is possible. So we'll just have to wait and see what happens tomorrow. But yeah, I just the memory stocks are kind of like now the ones that are sort of in the driver's seat. So we'll see what they trade like
Yep,
tomorrow.
yep, yep. So we shall see. With that being said, y'all, make sure you guys stay tuned with us because it's gonna be a rocky last week here of the month. I am predicting we're probably not done with sell off yet. It's probably gonna be one more drop before we go into the end of the month, and we're gonna see some rotation. So pay attention to the overall market. July, we might see some breathing room. July leading to August, we start seeing some breathing room, especially on those stocks that's been getting dumped. And as usual, we tell you guys when the markets start dropping, do your analysis, make your list, those stocks that you were happy about when they were twice what they are right now, keep an eye on them. You never know. Those are the good stocks that you were trying to get back in the day, maybe like a month ago, 2 months ago, and it was too high. It's time to start looking at some of those stocks and doing your analysis on them. So with that being said, this is Billy. I got Wale with me. We are out of here, man. We see you guys on
Oh,
Friday.
quick before we leave.
Yeah.
So I think we talked about this offline. Nancy Pelosi put up
Ooh,
a
yes.
million to $5 million in Intel calls
Right.
on when did she make that buy? On May 29th, I think it was. Now she bought at the 50 strike, so she likes to buy deep in the money contracts. But yeah,
Guys,
we
this is
know
crazy.
we know how Pelosi we know how Pelosi be moving. So maybe she knows something we don't know. And
she knows something.
Intel hit a 52-week high today, this week of 141.45. So
Mm.
that's just something to watch. So
Yep. So again, we've been telling you guys about Intel for a year now, maybe a year and a half. So hey, here we are, and all the stories that kind of come is aligning together to be able to show us like exactly what we've been talking about. But with that being said, yeah, have a good night.